Well, oil provided the main talking point on the markets today. Brent crude fell by almost 3.5% this afternoon after a US government agency forecast that the country's crude production could hit a record 10 million barrels per day next year. That put it on par with Saudi Arabia. Growing tension between Qatar and its neighbours has also raised concerns that OPEC won't keep its production cuts in place. A short while ago, a barrel of Brent crude would set you back $48.28. On currency markets, the pound's hit a two-week high against the US dollar on mounting expectations of a Conservative election victory. But that strength in sterling hit a lot of the FTSE 100's big dollar earners and dragged the index lower by almost 2/3 of 1%. One individual feature to tell you about, the plastic packaging group RPC, saw its shares fall by 7% amid concerns over its underlying trading. Deutsche Bank, staying with the markets, it's carried out research into which sectors of the economy would be positively and negatively affected by different election outcomes. Concluded that a Conservative majority of more than 50 seats would strengthen the pound and help domestic companies. It says that a Conservative minority or a majority of fewer than 50 seats would see a fall in the pound and hurt domestic firms. Deutsche Bank says the least likely outcome would be a Labour-led government, which it says would hurt banking, retail and home building stocks. Sebastian Raedler is the head of European equity strategy at Deutsche Bank and joins me now. So, Sebastian, your base case is a 50-plus seat Conservative majority. Why would that be good for the pound?
Well, one of the key features that has been driving the pound over the last couple of months is what kind of Brexit outcome would you get? And obviously you were focusing on that before. The general thinking that we have is if you get a large majority for Theresa May, that would dilute the impact and the influence of the hard Brexit backbenchers. So you have less need to pander basically to the need to have a hard and confrontational stance in your Brexit negotiations. If that is the case, you have less pressure from that side, you have lower political uncertainty, and typically the pound reacts to that in a positive manner.
Might not that necessarily be good news for the FTSE, though, because we've got a lot of big dollar and euro earners in the FTSE, and obviously their stock prices, their earnings have been flattered by a weaker pound. I mean, that would go into reverse, wouldn't it?
Yeah, I think you're entirely right. There are certain assets that you look at in this scenario for which you say the direction is very clear. The FTSE is conflicted because you would say lower political uncertainty is positive for risk. It is positive for the domestic stocks, let's say the FTSE 250, but you've got the drag from the pound. The FTSE 100 is caught in the crossfire. A better risk appetite pulls it up, a stronger pound pulls it down. It's hard to say whether in net terms it's a positive or a negative.
So which are the stocks that do well then under the scenario that you've sketched out?
So in this central scenario, which is, as you say, 50 seat plus a majority, you would say the retail stocks suddenly, which have been suffering for a long while, they suddenly look to be in a very sweet spot because you've got a number of factors helping them. So first, you've got less pressure and less downside risk for consumption simply because of that political uncertainty situation that we've discussed. A stronger pound helps them. Then you've got specific Conservative policy proposals that help them, specifically the reduction in business rates. And you say there's a number of boxes that's being ticked there, and that's the likes of Marks and Spencer's, Tesco, Next. And then you go one step further and you say there is a number of real estate companies that are related to those, the likes of Hammerson, for instance. They would likely also benefit. So we spoke to all our sector analysts and asked which are the key beneficiaries. Those are the ones that came out on top.
Now, with the scenario of a Labour victory, I mean, you point out in your research various losers. You don't really have many winners in there, I noticed.
It was an interesting situation. We went around to all our analysts and say, who would win in that scenario? No hands went up. And we asked them the other question, in that scenario, who might be an underperformer? And we had a number of analysts that said, I think my sector might suffer in that scenario.
So that's people, presumably the utility companies, yeah. Because, I mean, this is assuming that Labour wins. They want to renationalise, for example, the water industry. I mean, they'd have to compensate shareholders, though, and presumably they'd have to pay them a bid premium, or would they?
Yeah, I think what you would have, and we are really looking at the short-term impact, the kind of 1 week to two. For this industry, very clearly, you would have a massive wall of uncertainty rolling towards you. Perhaps ultimately you would get to some kind of settlement, but initially you would know there's a big problem coming your way, and it would find its expression in share prices.
And wouldn't infrastructure companies do well under a Labour government, given that they want to really pump prime?
Yeah, it depends. And I think there's a very interesting analogy that you had during the US election, where you had a number of economically problematic proposals from the Trump administration: build a wall, send some of the immigrants out of the country. The markets were clearly worried about it. But on the day he came out and talked about infrastructure spending, exactly as he said, and the markets were loving it, there was a very marked swing in sentiment and in the direction of share prices. So the big question will be, and it's a big unknown and the question mark, if you got a Labour majority or Labour-led government, on the day, would the focus be on some of the more problematic policy proposals? So if they come out and they say tax increases, nationalizations, that would be an issue. If you suddenly put the spotlight on fiscal stimulus...
Got to leave it there, Sebastian, I'm afraid. Sebastian Raedler from Deutsche Bank, good to see you. Thanks for joining me.